Hello, friends. Welcome back to this quick episode of various kinds of deltas. And today we are going to talk about a specific delta pattern which is going to define the qualification process for the buyer, sellers, and inside the bar value area. Here you have seen all these ideas before independently, and we have videos on these as well. On the right side we have delta bars based on bid and ask, and I've added Apple, Microsoft, and Amazon. We can also take another top 3 weighted stocks as well. Right here in the middle, what we are discussing for today, we have also had a video sessions on cumulative delta, so check those out on YouTube 365 forecast channel. So I'm not going to repeat those things, how to set these up. This one is also there. This is simply every software has bid ask, volume delta, and what we are discussing here is imbalance inside the bars. Now this is again all part of the software. We are using multi charts. It's all there for free once you have the software. And these green things lit up because we are looking at the imbalance bid ask deltas. Okay, and what that means is on the left side we have resting bids, on the right side we have resting ask. When the buyers get aggressive, they hit the ask and lift the offer, and they are getting also lifting the. So now what happens is the sellers or buyers are going to win, and who has controlled that single bar can be seen by this delta. Now this is a delta of ES, this is a delta of 3 stocks, and we're tracking this, and this is a cumulative delta. Cumulative delta, as the English word says, delta is for the bar, cumulative is adding the 2 bars, 3 bars that you can also customize in today's sophisticated API world. So first pattern you want to see is what we call as delta value divergence. So this delta value divergence is a pattern where the value goes higher, the yellow box. We also noted about the T shapes, right? We explained so many times before. When this yellow box looks like this, we have a bunch of videos on that as well. Check it out. Which means the buyers inside this bar became aggressive and they moved the value to the top side. Now giving us the opportunity to lean against this range as a stop loss. Same thing on the bottom side. When the sellers are in control, they keep pounding and pounding and pounding. What happens here? The value moves down and we have a inverted T. Why do we concern with all this? Because we can use this as a small stop loss. To become a professional trader, to make $5, $10, $15,000 a day, in today's world you can automate all this with some decent investment size, right? In historical world, this was called tape reading. In today's world, it is called footprint. In the last video, we discussed it. So these are the real imprints of the trades which have actually seen on the tape. Not resting orders, actually executed bid and ask orders. Volume delta chart is being used here. I'm using 7 minutes chart. You can use 1 minute, 5 minutes, it doesn't matter, because on Wall Street we use 7 minutes. I'm using 7 minutes. That's all there is. Nothing sophisticated about it. If you are a great scalper, you can go down to 1 minute, right? All right. So that is this chart. So the first pattern we want to talk about is the delta divergence. All things here besides these blue levels we have, everything is free. And sorry about this also. These are the custom indicators here and here. Everything else is free at this moment, right? What I am showing you. Try to understand logically. Now this bar can be a stop loss. Somebody wanted to go short here, right? Double top, and they put a stop here. Some people have different kind of stops, right? 5-point stop, 3-point stops, 4-tick stops, getting smashed. And they also know this Fibonacci extensions of 127 is also there. So these are getting smashed. But we know our great blue line methodology, where they are going, why they are doing this, right? Anyways, so I think we have made so many videos. Context is there. Now is putting together into a profitable, tradable scenarios. So let's stick with this so you understand the basics. So when I say delta divergence, what that comprises is a 2-bar comparison. You can do with 2-bar, 3-bar, but this is a 2-bar specific comparison because we are on a 7-minute chart. So if you look at this value, and if you look at this value, it went up and we got into this T shape. What happened to the delta in the market? Think what has happened. And it is happening into our blue line. Now we are looking inside the bar at these levels. What is the projected outcome of this move, right? Where do we get in? What do we do? It's 11 o'clock. Anyway, so right, this is the pattern. Value went up. This is a normal behavior, right? Value went up, delta went up. So delta in the bottom went up, value went up, right? This is telling you what is really going on in the bar right here. Who won the bar? Value went up. This is the value. Went up, up, up. Delta went up, up, up. Simple. This is a normal behavior. What happened here is not a normal behavior. This is your typical divergences you talk about. Value went up here to here. What happened to the delta? Went lower on a 7-minute chart. What does that tell us? And we have a T. So market, this guy pushed it up here, closed here, this one opened here, went up a little bit, came down, came up, closed here. All the patterns at the level, at the divergence of value, once this bar closes, this becomes my lean stop loss block for 1-to-5 ratio. 1-to-5, 1-to-5. Scared money doesn't make any money. Remember that. So there we go. All right, so this chart has been thoroughly explained. Now let's move on to the chart. This one you already know. We've been printing this for more than 1 year, year and a half now. This levels besides this month, which is critical for hedge funds to reset their portfolio. So that's all you need to know. But here we are now at this level. Let's go back to our, what else was telling us. Now you see the cycles. This is a cycle tool we have. Now this cycle tool and the bands are placed. So look at this cycle tool only, don't worry about anything else. The cycle tool is placed on cumulative data of 2900 changes. Okay, in multi-charts you can control all kinds of deltas you want to create, time based, Ranko based, this, that, right? Everybody has nowadays, modern technology is there. We are doing this. I want to see the shift of contracts in cumulative delta of 2900 contracts. Why 2900? Level 2 will teach you that. This is one of the squared rotations. So here it is. At this point, we were thinking, all right, there's a retest of deltas coming. Delta is moving down, cumulative delta is moving down, right? This delta is moving up, up, up into our levels. We saw a delta divergence. Now I'm looking at my cycles here. Hey, potentially a short is setting up. And this short is confirmed at the end of this bar because we have a delta which is in this bar. By after the divergence, we saw value pushed down, and this confirms it on a 7-minute chart. So what happens here? So now you have to take a shot and see how does it go, right? Stop loss can be somewhere here or here. 2.4 point, it doesn't matter. What matters is 1 to 3, 1 to 4. In your mind, since you don't have the practice or the skills to do it, you control that fear through taking small sniper profits, right? Which is good. You can still sniper your way into these profits, but again, if you have to take 5 trades a day, every time you put on a trade, probability of losing and winning is 50-50. More you trade, probability of loss is coming. So if you catch a good trade with proper trade management and contract management, you can stay on. And that's the game. There's nothing else. At this point, now let's shift to these 3 mini charts here and see what is going on. So if I look at this, they're all 7 minutes. Apple, in this area, when we saw this divergence, look at the Apple and the Microsoft. Both deltas were down. Look at Amazon. It is lower low. So this point, once you have mastered this way of thinking, at this point, if the big stocks are going to push down, so will the future. That's all there is. And here it is. This is the process. We are seeing a delta getting down on all sides, and this is where we are expecting a short move. And you can stay short as long as the data confirms it. And this is the trade. So this was the main pattern we wanted to discuss, and you have this, on your one screen, and watch it. If you need arrows, you need this. It takes practice. That's all there is, right? Okay, and now in this side, if you look at these big cycles of the contract change, I'm already expecting when market is on this side that I should be looking at some long, but I have to qualify it. I need to see something. So first thing I would like to look at is the delta divergence. Now here, same thing happened on the opposite side. Look at this, value went from yellow box, let me mark it again, went here. What happened to the delta? Went long. And why are we looking at long at this point? Let's see at this area. See that? Cumulative delta doesn't move that fast, as this is a longer contract. We want contract to happen, and we can see at this point, and it may be few minutes. This is might take half an hour or 1 hour for a big move to set up. That's why you don't have big moves happening every minute or every 100 ticks. It happens every, now there's a timing factor also. Why was this time the time the low was made, right? 11 o'clock, 10:30, 10:45. What's the magic behind it? That is part of timing modules. There are 30 ways to time the market. 30. But as a starting point, understand this. Value went down, delta went up, we saw divergence. We are in this area looking at longs. All right. We can also peek at, remember, it's a constructed structure we are dealing with. It's all constructed from the stocks. SPX, ES, futures, right? You guys already know that. So at this point, we want to see if there is any shift in delta and which of those. So we have one positive here and one positive on the bottom and three positives. Here also we have two positives. So Apple is not ready yet, but other ones piled up. So that is why I'm saying you can have the top 6 of them and do a scoring system where we can say, hey, what's the score end of this delta? If 6 stocks have positive delta, probability and the cycles are saying is going to move potentially. So this bar has shown us the delta divergence. In this setup description, 2 stocks have positive delta, which control a massive percentage of SPY, and there we go. And there's any evidence here where the buyers are coming up, you can see the green buyers got aggressive. So that's the difference. If you see the buyers on the top, they could be flushing out the stop losses. Here in the bottom, they're getting initiative. And it is only visible by doing this analysis. You can automate it by some automated software or not. So that is why this is working the way it is working. So I hope this explains very clearly what's going on. I think we already saw this one. Maybe let's pick one another day. See if you see patterns. Okay, this one is good one. Same thing. See that? Delta went down, value went up. Value went up again. Delta went down even further strongly. Now, obviously, this is end of the market time. This video picked up a wrong area, and these are all the stop losses. People exiting or whatever. The pattern is that market is going to go down from there, and it does. Now, this is not a good idea to analyze this one because now delta divergence happens all the time. You have to wait for it, right? So you have to take the best trades possible. Now, this is also a delta divergence. Look at this delta between these two. It went higher high extremely. Look at this. It did not follow through. So what we do? So where are we in this level? And now you can see these blue lines and these levels. What are they doing? They're giving us the opportunity to, once this happens, you don't know where to go in, let it pull you in. Put a limit entry on the short side, on the long side at this point. Right, this is used for big swings, but you got the idea. All right, so this was a thing. So now if you look at this on the right side, 2 of the Microsoft and Amazon has a negative delta, very large, giving me an extra confidence. Apple did not. You know this after the close, so right here, right? So now this happened. Now you can see why professionals are seeing it, right? Professionals are seeing what I'm showing you, and we are those professionals. So what's going on here? You can see now the sellers have showed up. Okay, so the stop loss is here or here. If we get bit, right, so goes here, goes up. You can see on the right side there's 21, 12 and 6. Seem like the interest of the buyers is going, disappearing. We have seller here and seller here. Some horizontal sellers are here. Take a shot at some point in this area within 1 or 2 point range, right? There's also another concept of horizontal values as well. So here we can see this area. You can just, if it can keep going, it could be going up, but we have 3 strike telling us, and this guy is telling us that hey, this is a short is coming, right? This is a big shots. I'm talking about 20 or 30 point moves. All right, so this is I think the end of this quick demonstration and education video. Continue to enjoy your free stuff. Thank you very much.